Well, will growth for the second half be challenging as stated by RBI in its monetary policy yesterday? Will political measures pose risk to fiscal consolidation? We spoke about that with a whole host of economists earlier on. In fact, got in important voices from Moody's as also from Aditi Nair of ICRA, and this is what they had to say on the matter.
From a sovereign rating perspective, monetary policy really, the way we assess it is the credibility and the effectiveness of monetary policy, and you know, RBI's actions over the last few years, and consistent with what happened yesterday, has been really focused on fighting inflation and institutionalizing a flexible inflation targeting regime with credibility that can anchor inflation expectations, and we've seen them be very successful on that front. So it's been supportive of the credit rating, and ultimately we expect their focus now to shift, as we said, on data dependence and a more neutral stance, which is appropriate in terms of fighting inflation and keeping a focus on managing inflation expectations.
Aditi, coming to you. RBI does seem pretty much upbeat in terms of growth. While H1 growth would be good given a lower base, there seems to be certain challenges to H2 growth. What's your assessment of growth going ahead?
So in terms of the growth outlook, you're absolutely right that H1 FY19 benefits from the low base that we had related to the lingering impact of demonetization and the transition to the GST. So we do expect growth to remain at fairly high levels in H1. Although the higher crude oil prices are something that could start feeding into dampening the purchasing power of consumers, particularly after we've seen the retail prices going up for fuels, and also really eating into the margins of producers. So there is a risk already in H1 that the base effect isn't going to be enough to really keep growth at very high levels. Having said that, we do have a lot of positives for this year. As of now, looks like the monsoon is going to be normal, and all the other focus that the central and the state governments have on supporting farmer income should be good for rural consumption. We still have staggered pay revision coming in, and we do have a general upbeat economic outlook, so urban consumption should also do quite well. Overall consumption should remain the chief driver of growth, followed by government expenditure in this year. Investment recovery should broad base by the second half of the year, but I think rising interest rates are something that may put a lid on the extent of the investment recovery. So on the whole, we're looking at a 7.1% growth in this fiscal.
William, one of the key concerns has been the risk to current account deficit as well as the fiscal deficit, primarily on account of higher oil prices. There are also certain concerns in terms of the overall GST collections. What's your assessment in terms of both the twin deficits?
So our expectation is that the government can achieve the 3.3% central deficit target for the year, but there are risks around that. You mentioned one of them, which on the revenue side we see two key risks. One is potential shortfalls for GST collections, given that this is the first year. There's still challenges around implementation, but we're seeing some improvement on that front, I would say, with implementation of the e-way bill and taxpayers getting more used to the system. That should, over time, start to settle out. In the last 2 months have been somewhat encouraging in terms of maybe those targets being hit this year. I think what's more important is the excise tax for oil, and given higher oil prices. And the government has benefited from that over the last few years. It's been very helpful in terms of managing the fiscal deficit. There's a risk that could be adjusted moving, particularly given some pressures on the elections toward the end of the year. So.
Okay, with that we come to the end of this edition of Closing Trades. Thanks very much for watching the show.